There are numbers that are just mathematics, and then there are numbers that are psychological barriers. Walls built by the collective consciousness of the market that say, you shall not pass. For a generation, that wall for silver was $50. It was the ceiling that swatted us down in 1980. It was the ceiling that broke our hearts in 2011. It was the number that the skeptics said we would never see again. But then there are numbers that change the world. Numbers that once crossed rewrite the rules of physics for an asset. We have just witnessed one of those moments. As we stand here today looking at the charts, looking at the reality of the physical market, we are no longer staring at a ceiling. We are standing on a new floor. The era of double-digit silver is over. The era of triple-digit silver has begun. I want you to take a moment to let that sink in. $100. For years, you were told it was impossible. You were told it was a fantasy. You were ridiculed at dinner parties, laughed at by financial advisors, and dismissed by the mainstream media. They called it a pet rock. They called it a barbarous relic. But while they were laughing, the tectonic plates of the global economy were shifting beneath their feet. While they were trading paper, the real world was running out of metal. And now, on this historic weekend in January 2026, the truth has finally been revealed. The price on the screen has finally caught up to the reality in the vault. This video is not a victory lap. Victory laps are for people who think the game is over. The game is not over. The game has just entered a new, far more volatile and far more dangerous level. Today, we are going to dissect exactly what happened to push us over this line, why this is fundamentally different from any rally we have seen before, and why the break of $100 is not the end of the story, but the opening chapter of a global repricing of all hard assets. We need to talk about the fingerprints of this move, because they are not the fingerprints of speculators. They are the fingerprints of desperate industrial buyers and sovereign nations who have realized that the dollar is a melting ice cube, and silver is the only lifeboat left with room on board. Let's start by analyzing the specific nature of this breakout. In the past, when silver approached a major resistance level, it would touch it and then collapse. It was like touching a hot stove. The paper shorts, the banks and hedge funds betting against the price, would flood the market with sell orders and the price would crash. But this time, something different happened. We hit 90. We hit 95. And instead of collapsing, the market bought more. Every dip was devoured. Every attempt to smash the price was met with a wall of physical buying. This tells us that the shorts are no longer in control. The physical buyers have taken the wheel. When we crossed $100, it wasn't a glitch. It wasn't a flash crash to the upside. It was a sustained, grinding conquest of the price level. This leaves a scar on the market. It destroys the psychological anchor that held the price down. For 50 years, traders have been programmed to sell silver when it gets high. Now, that programming is broken. They are realizing that high is a relative term. $100 is high compared to $20, but it is incredibly low compared to the amount of money that has been printed in the last decade. Adjusted for real inflation, for the expansion of the money supply, $100 silver is still cheap. It is just catching up to the debasement of the currency. The most critical differentiator between this rally and the failed rallies of the past is the behavior of premiums. In a typical paper-driven rally or speculative bubble, the spot price goes up. But the premium, the extra amount you pay to get the physical coin, goes down. Why? Because people are selling. When the price spikes, the average person dumps their grandmother's silverware and their old coins back onto the market to cash in. This flood of secondary supply crushes the premiums. But look at what is happening right now. The spot price has just crossed $100, and yet premiums are rising. You cannot find a silver eagle for spot plus $2. You are paying spot plus 10, 15, maybe 20%. This is an anomaly. This is a glitch in the matrix. It means that even at record high prices, people are not selling, they are hoarding. And the people who don't have silver are panicking to get it. When price and premiums rise together, it is not a bubble. It is a run on the bank. It is the public realizing that the paper price is a lie, and the physical metal is the only truth. We have to talk about the East. For too long, the silver price was set in London and New York. It was set by men in suits trading contracts that claim to represent silver. But the physical market has moved east. China and India are no longer just passive participants. They are the whales. We have seen import numbers into Shanghai that are staggering. We are seeing inventories in the Shanghai Gold Exchange deplete. And we are seeing domestic premiums in China trading way above the international spot price. This is the smoke under the door. When you see smoke coming from under the door, you know there is a fire, even if you can't see the flames. The high premiums in Asia are the smoke. They tell us that the metal is gone, it has been absorbed, it has been turned into solar panels, into electric vehicles, into electronics, and into sovereign reserves. The West has been drained. We have been selling our silver to the East for decades at suppressed prices, and now we are waking up to an empty cupboard. The East is not selling it back to us. If we want it, we have to pay their price. And their price is not $100. It is much higher. This brings us to the concept of inelastic supply. This is an economic term that sounds boring, but it is the reason why silver is going to triple digits and beyond. In most markets, if the price goes up, the supply goes up. If the price of corn doubles, farmers plant more corn. If the price of oil doubles, they drill more wells. But silver is unique. The vast majority of silver, over 70%, comes as a byproduct. It comes out of the ground when miners are digging for lead, zinc, copper, and gold. Think about what that means. The miner is not looking for silver. He is looking for copper to build the grid. He finds silver by accident. He sells the copper to pay the bills, and the silver is just a bonus, a credit against his costs. Because of this, the supply of silver is determined by the demand for copper and zinc, not the demand for silver. If the global economy slows down and we need less lead and zinc, the supply of silver drops even if the price of silver is skyrocketing. So here we are at $100. You would think the miners would be rushing to produce more. But they can't. They cannot just turn a dial. To build a primary silver mine, a mine dedicated to silver, takes 10 years. It takes permits, it takes exploration, it takes capital, it takes construction. We have underinvested in mining for 15 years. We have demonized the industry. We have made it impossible to build new projects. And now we are facing the consequences. The supply cliff is here. We cannot print silver. We cannot magic it out of thin air. We have to dig it up, and we forgot to dig. Now, let's confront the elephant in the room, the shorts. There is a narrative online that the shorts are evil manipulators trying to suppress the price. And while there is truth to the manipulation history, the reality is more nuanced and more dangerous. Many of these shorts are commercial shorts. They are bullion banks and refiners who use the short market to hedge their inventory. They are businesses. But in a vertical market, a hedge can become a death sentence. When silver crosses $100, these entities are sitting on massive paper losses. They face margin calls. The exchange demands more cash to keep the position open. If they don't have the cash, they are forced to buy back the contract. This is short covering. And short covering is buying. It is forced buying. It is buying that does not care about the price. When a short covers, they are adding fuel to the fire. They are buying into strength. This creates a feedback loop. The price goes up, shorts are forced to cover, which drives the price up further, which forces more shorts to cover. This is how you get a melt-up. This is how you get moves that defy logic. It is a mechanical breaking of the market structure. We are seeing signs that this is happening right now. The commercial shorts are being overrun. They are capitulating. And as they exit the burning building, they are trampling each other to get out the door, driving the price higher and higher. But the fear driving this market is not just about losing money on a short position. It is a deeper fear. It is delivery doubt. For decades, everyone assumed that if they stood for delivery on the COMEX, the truck would show up. They assumed the metal was there, but now doubt has crept in. The registered inventories, the metal available for delivery, have plummeted. The vaults are looking thin. When a major player, a hedge fund, a family office, a corporation, starts to doubt the solvency of the exchange, they stop trading paper and they demand the metal. They want it in their own vault. They want possession. This is the bank run phase of the precious metals market. It's not a run on cash, it's a run on ounces. And just like a bank run, once it starts, it cannot be stopped by words. It can only be stopped by delivery. And if the metal isn't there, the price has to go to a level that convinces someone, somewhere, to sell their family heirlooms. That price is not $100. So what does the triple-digit era look like? It looks like volatility, extreme stomach-churning volatility. You need to be prepared for this. When we break a level like $100, we attract hot money. The momentum traders, the algorithms, the tourists, they pile in. This drives the price up fast, but they also flee fast. We could see silver go to $120 and then crash back to $90 in a single day. You have to understand that a drop to $90, which would feel like a crash, is just a retest of the breakout. It is healthy, it is normal. But if you are leveraged, if you are emotional, if you bought at the top because of FOMO, that drop will wipe you out. The triple-digit era is not a smooth ride to riches. It is a rodeo. It is a test of your conviction. You have to ask yourself, why do I own this? Do you own it to make more fiat dollars? Or do you own it because you believe the fiat dollar is dying? If you own it to make dollars, you will be tempted to sell at 110. You will take your profits and go buy a car. And then you will watch in horror as silver goes to 150, then 200, then 300. You will have traded a generational asset for a depreciating liability. But if you own it because you understand the structural deficit, because you understand the debt trap the world is in, because you understand that silver is the only honest money left, then the volatility won't scare you. You will look at a drop to $90 as a gift. You will look at $100 not as a ceiling, but as a validation. We also need to look at the relationship with platinum and palladium. These are the sister metals. Often they lead the way or confirm the move. Right now, the entire complex is moving. This confirms that this is not just a silver story, it is a hard asset story. It is a rejection of financial assets. The world is overweight stocks and bonds and underweight things that are real. We are seeing a great rotation. Capital is moving from the abstract to the concrete, from the digital to the physical. This rotation is like trying to pour the ocean into a thimble. The bond market is $100 trillion. The stock market is $100 trillion. The silver market is tiny. It is a rounding error. If even a fraction of 1% of the capital in bonds tries to move into silver, the price has to go vertical. There is simply no other way to balance the equation. $100 is just the first tick of the clock in this rebalancing. I want to address the psychology of the late adopter. Now that we are in triple digits, your friends are going to call you. Your family is going to call you. The people who laughed at you at $50 are going to ask you how to buy at $100. This is a dangerous moment. You have a responsibility here. Do not tell them to go all in. Do not tell them it is easy money. Tell them the truth. Tell them about the volatility. Tell them about the premiums. Tell them about the long-term thesis. If they buy at 100 and it drops to 90, they will blame you. They will panic sell. You have to educate them. You have to explain that they are not buying a lottery ticket. They are buying insurance against a burning building. The fire in the building is the debt. The fire is the inflation. The fire is the loss of trust in institutions. Silver is the insurance. And insurance gets more expensive while the fire's raging. We are also going to see a change in the narrative. The media will turn. They will stop calling it a pet rock. They will start calling it a strategic asset. They will start talking about the solar shortage. They will start talking about national security. When the narrative shifts, the institutional money flows. Pension funds, endowments, insurance companies, they have zero allocation to silver right now, zero. If they move to 0.5%, the price doubles again. The triple-digit era is also the era of political risk. As the price rises, governments will take notice. They will see silver not just as money, but as a critical resource for their green agendas and their military ambitions. We might see export bans. We might see windfall profit taxes on miners. We might see nationalization of assets. This is why holding physical metal in your own possession is so critical. If you own a paper contract, you are vulnerable to a rule change. If you own the metal, you are sovereign. This is the ultimate lesson of the $100 milestone. It is a lesson in sovereignty. The people who held through the dark times, through the smashing, through the boredom, they are the ones who are being rewarded now. But the reward is not just financial. The reward is the knowledge that you were right when the world was wrong. The reward is the security of holding wealth that does not depend on a bank, a government, or a power grid. So where do we go from here? What is the target? Is it 150? Is it 200? Is it 500? The answer is it doesn't matter. The dollar is the denominator. If the dollar collapses, silver goes to infinity. We are not measuring the value of silver. We are measuring the death of the dollar. In 1923, Weimar Germany, an ounce of silver was worth billions of marks. Did the silver change? No. The mark died. We are watching the slow-motion death of the current monetary paradigm. Silver at $100 is just the market waking up to the funeral. Do not let the number scare you. Normalize it. Get used to it. $100 is the new normal. In fact, it is the new floor. The cost of mining is going up. The cost of energy is going up. The cost of labor is going up. The miners cannot produce it for $20 anymore. The floor is rising. And as we look forward, we have to keep our eyes on the real drivers. Watch the bond yields. Watch the deficit. Watch the geopolitical tension. As long as those drivers are in place, the trend is up. The pauses, the pullbacks, the corrections, they are just noise. The signal is the structural deficit. The signal is the empty vault. You are witnessing history. You are living through the moment that future generations will study. They will look back at the chart and say, that was the moment. That was the breakout. You are standing in the middle of the breakout. Do not get shaken out. Do not get greedy. Do not get fearful. Stay disciplined. Stick to your plan. If you need to sell a little to pay a bill, do it. But do not sell your core position. Do not sell your insurance. Because the storm is not over. The storm is just entering its most intense phase. The triple-digit era is here. It is real, it is structural, and it is just the beginning. Welcome to the new world. A world where tangible assets act as the anchor in a sea of paper chaos. You have the anchor. Hold onto it tight. The ride from here will be wild. It will be exhilarating. It will be terrifying. But if you understand the fundamentals, if you understand the why, then you can endure the how. The why is simple. The world is out of silver. The world is out of trust. And the world is out of time. $100 is the alarm bell ringing. It is time to wake up. It is time to pay attention. And it is time to realize that the wealth transfer we have been talking about for years is happening right now, in real time, on your screen. Don't blink. Don't look away. And for God's sake, don't sell your lifeboat while the ship is still sinking. We will see much higher prices than this. We will see days where silver moves $10 in a session. We will see days of panic and days of euphoria. But the trend is undeniable. The dam has broken. The water is rushing through. Let the water wash away the illusions of the paper market. Let the water reveal the true value of the metal. We are ready. We are positioned. We are the remnant. The triple-digit era. It sounds nice, doesn't it? But remember, it's just a mile marker. The destination is much further down the road. The destination is fair value. And fair value in a world drowning in debt is a number that would shock you today. So take a deep breath. Celebrate the milestone. But keep your boots on. We have a mountain left to climb. This is the reality of the market today. It is a reality of scarcity. It is a reality of consequence. The consequences of 50 years of easy money are finally coming due. And the bill is being paid in silver. Make sure you are the one holding the receipt.